Well, friends, so the product of the day is Sri Health Suraksha Insurance. So, if you are aware, this is a new product we have recently launched and this week only. And this is our first indemnity based health insurance product. I repeat, this is our first indemnity based health insurance products. Now the question is what health insurance products, other health insurance products are? They all are benefit based products. You mean earlier also we have launched 1, 2, 3 health insurance products, but they are all known as benefit based products. Now the question is, what is the basic difference between the health insurance indemnity based and health insurance benefit based? So to understand it, you must know benefit based products are those products where if the claim is payable, that will be paid in full for the full sum insured, lump sum payment, and there would be no requirement for billings. Here in indemnity based products, the reimbursement of the claim is made on the basis of bills. Whatever is the sum insured, whatever is the maximum limit of the insurance company, that makes no difference. Here, whatever is the treatment cost incurred by the insured, and to claim that what bills he is able to claim or to reimburse, that amount will be paid in addition to the policy deductibles. That means there are a lot of things which are deducted out of the indemnity based products. But in benefit based products, there is nothing to deduct. Full amount of sum insured selected by the insured will be paid lump sum, means in one time only. That is the basic difference between the benefit based products and the indemnity based products. Now the question is why we have launched this product. Of course, it helps to cover your medical treatment cost. It protects you from the financial losses which may occur due to illness or accident. But there are certain other differences. First one, there is a facility of cashless treatment. Normally, in benefit based products, it is there or not, it depends. But indemnity based products, here in this category of product, we are providing cashless treatment. For that purpose, a separate agency is required. That agency is called third party administrator. In short, it is called TPA. So that TPA is needed to tie up or to bridge the gap between the insurance company and the insured. So that acts as a third person or third party administrator who will manage the cashless treatment and will tie up with the hospitals of the network wherein the insured or the patient can take the treatment wherever he is available and in any city he is available. So cashless treatment is available in one city with many hospitals. It is not like motor vehicle garages. That one tie-up is there for the vehicle for cashless workshop. Here, those hospitals which are having the chains across the country, those hospitals who are big in number, those hospitals where the beds are required more than 15, they are in the network of the TPA. In any of those hospitals, the insured can take the treatments. So this is one big facility which is known as the cashless treatment. Secondly, no medical test up to 50 years. Tax saving as usual, which is available on all health insurance policies, is there. Financial stability is there, better medical care is there, support in medical emergency is there, and this is also known as the health insurance product, maybe of a different category. So let us see what are the special features. What are the coverages? First of all, inpatient hospitalization is there. In addition, pre-hospitalization expenses are reimbursable. Post-hospitalization expenses are reimbursable. Daycare treatment is payable. Modern treatment is payable. Ayush treatment is payable. Cataract treatment is payable. And the ambulance expenses are also covered under the policy. So here you can visualize so many benefits are there. Coverage is very wide. As compared to the benefit-based products, certain things are additional. And these additional things are required in certain kind of treatments which are not covered under the benefit-based products. Certain kind of expenses which are not available in the benefit-based products, or they are not part of the treatment. Here they becomes the part of the coverage, like pre-hospitalization expenses, post-hospitalization expenses, daycare treatment, modern treatment. Now this word modern treatment is new to you. What is this? I'll explain it, no worry. So all these are part of the coverages. Now see. Just wait. That is what I am saying. I will explain it to you, don't worry. Now the question is, how the hospitalization will be treated? So as far as the hospitalization under this policy is concerned, medical expenses incurred for hospitalization shall be indemnified up to the sum insured, plus cumulative bonus. This is a new term for you, that is cumulative bonus under the health insurance policy. That also I will explain just now. But when hospitalization would be there, what kind of facility will be reimbursable? The first part is room rent, boarding, nursing expenses, but there is a limit. 2% of the sum insured subject to maximum 5,000 rupees per day. Means room rent is payable, boarding or nursing expenses are payable, but to the limit of 2% of the sum insured and maximum 5,000 rupees per day. Secondly, ICU charges or intensive cardiac care unit charges are also payable, but with a limit of 5% of the sum insured and 10,000 rupees per day. Thirdly, surgeon, anesthetist, medical practitioner, consultation, specialist fee, all are payable on the actual basis. In addition, there could be certain tests, blood test, anesthesia, oxygen, operation theatre charges, surgical appliances. They are also payable on the actual basis. Means they are covered, they are part of the policy, and they becomes payable under the category of hospitalization of the insured. Now, cataract treatment. This is normally excluded from the health insurance policies. If it is covered, then there is a limit. In our policy, this is covered, cataract treatment. But there is a limit, and the limit is 25% of sum insured or 40,000, whichever is lower, per eye under one policy year. That means in one policy year, insured can get cataract treatment up to the 25% of the sum insured or 40,000, whichever is lower. So cataract is normal after 50, 55 or 60. And it is required almost in both the eyes. But it depends, because one cataract treatment is allowed in one policy year. And that too with a maximum sum insured limit of 40,000 or 25%, whichever is lower. Secondly, dental treatment. Normally you will find in the health insurance policy, dental treatment is also excluded. And dental treatment due to injury. So that is also covered. And that is covered up to the policy sum insured. Plastic surgery treatment is covered due to injury. All daycare treatment is covered. Road ambulance expenses are payable up to 2,000 rupees per hospitalization. Modern treatment is payable up to 50% of policy sum insured. But the question is, hospitalization has to be for minimum 24 consecutive hours. as inpatient. This is not required for daycare treatment. Daycare treatment is a cataract, yeah, dental health. For these things, complete 24-hour hospitalization is not required. Doctor will not allow 24 hours hospitalization because they hardly need 1 hour and maximum 2 hours. That's all. So, except daycare treatment, in all otherwise illness or sickness cases where the claim has to be sought by the insured, minimum 24-hour consecutive hours as inpatient hospitalization is must. Now, Ayush treatment is also covered. Now, this word Ayush is typical to you because this is not in fact a word, but this is a combination of various abbreviations. Ayush treatment is simple to say, easy to say. So, Ayush treatment means medical expenses incurred for hospitalization under Ayush hospital. Self-identified, but what is this Ayush hospital? This includes A for Ayurveda, Y for Yoga or Naturopathy, U for Unani, S for Siddha, and H for Homeopathy. These all are different kind of pathies meant for medical treatment. They are all different to allopathy. What we 95% people prefer is allopathy because there the immediate cure is possible. These pathies are also for treatment, but they may take longer time. They all have their plus minuses. So, for example, Ayurveda. The sickness is eradicated from roots. There are no side effects, but it takes time. Where the emergency treatment is required, Ayurveda can't help you. So they all have their plus minuses. Only good part of the story is all these pathies are included in the treatment. If the insured has taken the treatment of homeopathy or Ayurveda or naturopathy, they are also payable. Here again, hospitalization of minimum 24 consecutive hours as a patient is required. Now the term used is pre-hospitalization and post-hospitalization expenses. What does it mean? Yes. Yeah. Yeah, tell me. Yes, covered. Yes. So pre-hospitalization expenses means any medical expenses incurred prior to admission in hospital is known as pre-hospitalization. Say for example, I have taken the policy, Sri Health Structure. I am suffering with some sickness. I am taking the treatment as per the prescription of the doctor, taking the medicines also. For 20 days, 25 days I have taken the medicine. But there is no improvement. Now doctor advised me to get hospitalized. I got hospitalized. So then my treatment continues for 5 days and thereafter I was relieved. So I can claim the medical expenses which incurred by me before hospitalization for 20-25 days. Those are known as the pre-hospitalization expenses. If my treatment continues even after discharge from the hospital, I am incurring the hospitalization expenses, I am incurring the treatment expenses. Those will also become payable under the post-hospitalization expenses. So this pre-hospitalization means any medical expenses incurred prior to admission in hospital is known as pre-hospitalization. Day count 30 days means up to 30 days. If the pre-hospitalization expenses are incurred for say 2 months and then the person was hospitalized, so out of that only 30 days are paid. But these 30 days includes lab tests, X-rays, CT scan, ECG, MRI, doctor consultation, medicines, and these are the normal expenses because doctors normally advise for every kind of test before hospitalization. So they are all covered under the pre-hospitalization expenses. Similarly, the post-hospitalization. After hospitalization, after discharge from the hospital, when the treatment continues for some 1 month, 2 months, 3 months, 4 months, as per the advice of the doctor, out of that, for 60 days, means for 2 months, these expenses are reimbursable, which may include consultation fee, diagnostic charges, medicines and drugs, physiotherapy, etc. So both pre-hospitalization and post-hospitalization expenses are covered and payable under the policy. Now comes the term cumulative bonus. This cumulative bonus is a reward for the insured. For what? A reward offered on renewal by insurer to policyholder who do not make any claim during the policy year. If I have taken a policy, during the policy period I have taken no claim. Now my policy is due for renewal and I am getting renewed it. What the company will say? Company will say your sum insured is 2 lakh rupees or 5 lakh rupees or 10 lakh rupees. Suppose 10 lakh rupees is there. You have taken no claim during the policy period. When you are getting your policy renewed, we will increase your sum insured by 5%. Means there is no cash discount in the premium. On the contrary, sum insured is increased by 5%. So my sum insured will become higher, basic sum insured and 5%. But I will pay the premium only on the basic sum insured, not on the CV, not on the cumulative bonus. And if my cumulative bonus is accumulated every year because I am not filing any claim on the policy, in one particular year, if there is a claim, then with the same 5%, the cumulative bonus will be reduced. This maximum limit of cumulative bonus for accumulation is 50%. I repeat, to explain it in an easier manner. On first year, I took no claim, 5% bonus is there. Second year again, 5% bonus is there. Third year again, bonus is there. But fourth year, suppose I am taking the claim, the 5% cumulative bonus will be deducted. And it can be accumulated up to maximum 50%. So cumulative bonus shall be available only if the policy is renewed, premium paid within the grace period. Grace period or before the expiry date. Let us see an example. This is an example of cumulative bonus. In first year, suppose I have took a policy of 5 lakh rupees. For first year, there is no cumulative bonus. On renewal, I am getting it renewed. 5% bonus will be there because there is no claim on the policy. So my sum insured automatically becomes 5,25,000. I am paying the premium for 5 lakh only. And second year again there is no claim. My sum insured will become 5,50,000. Third year again there is no claim. It is 5,75,000. Fourth year again there is no claim. It is 5 lakhs plus 1 lakh, 6 lakh. Fifth year if there is a claim, so 5% is deducted. So this 1 lakh will remain only 5,75,000. If you want to ask that in first year itself if there is a claim, That means there will be no bonus and now next renewals. But since there is no accumulation, this basic sum insured cannot be reduced. Basic sum insured will remain as it is 5 lakh rupees. So if there is no claim, your sum insured is increased. If there is claim, you are losing the bonus or the bonus is reduced from your earned bonus. That means cumulative bonus shall be available only if the policy is renewed within the grace period. Now coming to eligibility criteria of the policy. What is eligibility criteria? First of all, age limit, 18 years minimum. Means only an adult can take the policy. But the risk of a child can also be covered. How it is possible? Because policy can be taken for self, spouse, dependent children who could be 3 months to 25 years, but not self-dependent. They must be financially dependent upon the parents. Then only they are covered. If they are self-dependent, they will take a separate policy. Parents and parents-in-laws. Parents and parents-in-laws also should be covered here. That means minimum age limit is 85 years, but the coverage could be for self, spouse, dependent children, parents and parent-in-laws. Now, there are two types of policies. One is on the individual basis, that is separate sum insured for each member. Other is on the floater basis, family floater basis, means single sum insured for all family members. Both are available. Both options are as per the choice of the insured. Now, sum insured is available in 3 different categories: 5 lakh, 7.5 lakh, and 10 lakh. Proposer's minimum age is 18 years and maximum is 65 years. If the policy is running, the maximum age could be 70 years, 75 years, or 80 years in continuation. But initially, the policy cannot be given for a person more than 65 years. Policy period is only 1 year. It is not for 3 years, 5 years, or 10 years. It is for 1 year only. Now, there are certain things which you must know. And these are: one thing, what does hospital means? A hospital which is available in any of the cities, if the population of that city is less than 10 lakh, then 10 inpatient beds must be there. If it is more than that, then 15. So has at least 10 inpatient beds in those towns having a population of less than 10 lakhs and 15 inpatient beds in all other towns. If we are taking a treatment in a hospital where only 6 inpatient beds are there, that would not be in the network of the TPA. So you won't be able to get the cashless treatment first. Secondly, that hospital may be treated as hospital or not by the insurance company, that could be doubtful case. Because there are certain nursing homes or some clinics which may have 2, 3, 4, 5 beds, but that will not come under the category of hospital. Because under the hospital category, Clinical Establishment Registration and Regulation Act 2010 is applicable, which defines them as hospital. For the Ayush purposes, the criteria is slightly different. Here only 5 inpatient beds will work. Even if 5 inpatient beds are there, that would be permissible under the Ayush category. Free look period. Free look period means this is a right of the insured if he is not satisfied with the terms and conditions of the policy. But within 30 days, he can get the policy cancelled. The insurance company will pay his full premium back except to deduct the administrative fee. Now, this administrative fee is also predefined. So this 30 days free look period is provided by all the general insurance companies and standalone health insurance companies for the customer, for the insured who has taken the health insurance policy, maybe any kind of health insurance policy. So free look period is 30 days. Secondly, grace period. Grace period is the period which starts from the date of expiry of the policy. A specified period immediately following the premium due date during which premium payment can be made to renew a policy. So without loss of continuity benefits like pre-existing disease and initial waiting period. If the premium is paid within the grace period of 30 days, 30 days start from the date of expiry of the policies. It means all the rights of the insured are protected. It will not be treated as break. Insured will get the cumulative bonus also. Other benefits like pre-existing diseases or waiting period will also be treated under the same category. So no rights will be seized if the premium is paid within the grace period of 30 days. If it is 34 or 35, in that case, the earned benefits will not be provided. That's a loss to the insured. Now, initial waiting period. This policy mandates that during 30 days of taking the policy, no claim will be paid by the insurance company. Any expenses related to the treatment of any illness is not covered for first 30 days from policy start date. But this is not applicable for accident. For accidental cases, no general insurance company can limit the initial waiting period of 30 days. Accident means immediate claim has to be paid. Accidental risk never permit any initial waiting period. Secondly, initial waiting period would be on the first policy only. It cannot be on any renewal. So for renewals, 30 days waiting period will not be applicable. Then pre-existing disease period. Pre-existing disease is one thing which is excluded by all the general insurance companies from all the health insurance policies of any kind. Pre-existing disease means a disease which is already existed today. Insurance is always for the uncertain things which can happen, may not happen. But pre-existing disease is something which is existing today, which has already happened. No company will cover it. So expenses related to the treatment of a pre-existing disease and its direct complications shall be covered only after 36 months. That means 3 years waiting period is there for the pre-existing diseases. It may differ company to company. That differs product to product, but no company will cover in the first year itself. So for our policy, this is a 36 months waiting period. In case of announcement of some insured, it apply afresh on enhanced sum insured only. That's altogether a different story. But for first 36 months, no pre-existing disease will be covered. Now, co-payment. This policy provides the provision of 5% co-payment. Co-payment is something like we can say what is directed as compulsory excess. Insurance companies are not paying as compulsory excess, but in health case, it becomes co-payment. Means if my claim of 3 lakh rupees is payable, insurance company will ask 5% amount from me. 15,000 I have to pay. Then only they will pay 3 lakh. Or they will pay 2,85,000. If it is a cashless treatment, it has to be paid direct to the hospital. 5% have to be deposited by me. So co-payment means a cost sharing requirement under a health insurance policy in which insured will be here. A specified percentage of claim amount. There are certain policies where the co-payment is 10%. But in our policy, this is 5%. Co-payment does not reduce the sum insured. Sum insured will remain as it is. This is applicable only in case of claim. This is applicable only in case of claim. And the percentage is already prescribed. It is clearly mentioned on the policy. There is a provision for each and every claim under the policy. If there are 4 claims on the policy in 1 year, in all the 4 cases, 5% has to be borne by the insured himself. Now, list of modern treatments. Your question is, what is modern treatment? There are certain specific diseases which are coming under the modern treatment. They are modern treatment or surgical procedures require less than 24 hours hospitalization due to technology advancement. They require less than 24-hour hospitalization due to technology advancement. Means all these specified 12 diseases are covered. Point number 1. Claim is payable for all these 12 diseases if insured is suffering from any one. Point number 2. Third, minimum hospitalization of 24 hours is not mandatory. Because there are certain advancement in technology where the treatment is given within hours. Say, for example, robotic surgery, bronchial thermoplasty, oral chemotherapy, deep brain stimulation, balloonoplasty. So they need very short time for treatment. IOLM, intraoperative neuromonitoring. So these are the 12 specific diseases where the modern treatment or the surgical procedure is required for less than 24 hours. But they are covered, they are payable, and the clause of 24 hours mandatory hospitalization is not applicable to them. Then waiting period for 24 months. There are specific 20 diseases. 20 specific diseases which are listed here. Out of these 20, if insured is suffering from any of these diseases, in first year and second year he will not get the claim. After 24 months only, means in third renewal only he will get the claim. So these are 20 specific diseases. Even the cataract is here. Cataract and age-related elements is there. Gastric ulcer is there. Hysterectomy is there. Tonsillectomy is there. Hernia is there. So these are 20 specific diseases where the claim will not be paid in first year and second year. Third year onward, they will be covered. Now, there are certain general exclusions of this policy because this is the minus point of the indemnity-based policies, that a lot of things are deducted out of the claim amount, other than exclusions also. But for the specified general exclusions, if anything is deducted, that is okay, because that is specified by all the general insurance companies in their policies, and they are mentioned on the policy itself. If there is any breach of law, if there is obesity, change of general treatment is there, expenses outside of India are there, so they are not covered under the policy. Then we are coming on the claim process. So claim process is important because people before taking the health insurance policy want to know how you will get the claim. And this is an important question one should know before buying the policy. So first question comes to you will be whether you are allowed the cashless treatment or not. So the answer is yes. TPA will handle the claim on behalf of SBI. TPA can initiate cashless in 24 hours from the date of emergency hospitalization. Cashless request to be sent within 48 hours before admission in case of planned hospitalization. So the TPA is there, cashless facility is there. Then how reimbursement would be there? Reimbursement of claim is the most important part. If an insured is not getting the claim on the policy, he will lose the trust. He will never buy it again. So claim is the reason of existence of insurance companies. If claim services are not proper, not better, people will lose the trust. So the reimbursement system or cashless system, either basis, claim has to be paid. If the claim is on the reimbursement basis, means the insurer is not available the cashless facility. In that case, claim form will be submitted to the TPA after discharge within 30 days. If there are bills related to pre or post hospitalization, that will also be submitted. Insurer to intimate the TPA within 24 hours from the date of emergency hospitalization. Even if the cashless is not taken, because in certain hospitals the cashless facility would not be there because they are out of the network. An intimated information to TPA 48 hours before admission in case of planned date hospitalization. So both kind of cashless as well as reimbursement claims are paid by the insurance company. Wherever possible, cashless facility will be given. If it is not, then the reimbursement claim will be paid. Now what would be the process? If the cashless treatment is required, the insured has to select the network hospital. So for the latest network hospital list, TPA website will tell you. And the detail of the TPA website we are giving here. Secondly, member ID, policy number or policy number card is shown in the hospital TPA desk. Because TPA will identify by the ID card. The ID card has to be shown. Hospital asks members to fill the pre-authorization request form for cashless claim. Normally, TPAs are arranging their 1 or 2 persons in network hospitals where they can facilitate the cashless treatment to the insured. Insured members fills the authorization request form with relevant information and hospital send the authorization request form duly signed by the treating doctor to TPA. So this is a simple claim process for cashless treatment. Further, in continuation, the TPA provides pre-authorization approval to hospital based on policy coverage terms and conditions. Once the TPA is providing the pre-authorization approval, it means hospital is in comfort to provide the treatment because they have been guaranteed by the TPA for arranging the cashless treatments. That means the hospital will get the treatment cost reimbursed by the insurance company directly in their account. So card holders avails cashless treatment, signs the documents, get discharged from the hospital after paying for co-pay, non-payable items, etc. are applicable. Even if the cashless is taken, there are certain non-payable items that only have to be paid by the insured. So due to any reason, the cashless facility is not availed or is not approved, insured member pays the treatment upfront. Reimbursement of claim shall be filed with the TPA. So if the cashless facility is not approved, in that case only the reimbursement claim will be taken. Again, the help of TPA is useful, and the settlement will be through TPA only. So after discharge, these documents are required to submit to TPA, like duly completed claim form, photo identity proof, NEFT detail, KYC documents, original doctors or hospitals prescription advising admission, final bills with itemized breakup. This bill is very important. If the insured has lost the bill or missing the bills, insurance company will not pay that cost even if the TPA certifies that. Because bill is the document that will be asked by TPA first. So bill is the most important part here. In benefit-based policies, billing has no importance. But here, bills is the most important document. In addition to the hospital prescription and original payment receipts against final bills. Original discharge summary is just required to confirm that when the insured got discharged from the hospital. So medicine bills and prescriptions on which medicines are advised. If there is any test, that is investigation test or diagnostic test, reports are required. A sticker invoice of the implant wherever applicable. MLC medical legal report if it is a case of accident, then only they are required. So this is the claim procedure. Now coming to the premiums, loadings and discount. So when you are selling this policy, first of all, the premium will be the important part because every insured wants to check how much cost he has to bear to take this policy. So our sum insured is divided in three categories: 5 lakhs, 7.5 lakh and 10 lakhs. And basic funda for every health insurance policy is that the premium is always charged on the basis of age bands. Age band means slabs of normally 5 years are made by the insurance company for the premium purposes. Say if the risk covered belongs to a minor that is less than 18 years of age, premium would be lowest. Higher is the age, higher is the premium. Lower is the age, lower is the premium. This is the basic conduct of health insurance. Suppose you are giving a policy to a person of 40 years. Sum insured is 10 lakh. So the premium is 9224 plus GST. Here you will see one important word, that is without value pack and without GST. So without GST is okay if the premium is 9224 plus 18%. Without value pack, that is important. That I will explain in next slides. If you are giving the policy to a person of 65 years, sum insured is suppose 5 lakh only. So premium is 24,197 plus GST. So taking premium is simple because this chart is available according to age or age bands up to 80 years and even over 80 years, because the policy can continue on renewals even after 65 years. But you cannot initially give the policy for a person of more than 65 years. Maximum age limit is 18 to 65 years. Some insured bands are fixed: 7.5, 10 lakh, starts with 5 lakhs. If you want to see this table with GST, this is given here. Means you can charge this premium directly, but this is still without value pack. This is still without value pack. Sum insured, premium plus GST. This is another chart. Now, here comes the with value pack. With value pack, premium would be higher. Why it is higher? That I am going to explain just now. But the premium would be higher. Means, take a direct chart. Premium with GST and with value pack. Suppose the person is of 50 years. Sum insured is only 5 lakhs. Premium is only 14,281, including all. Nothing is to be taken extra. If the sum insured is 10 lakh, 18,622. Nothing extra is required. This is with value pack. Now what is this value pack? This is important to understand. In value pack, we are providing few extra facilities. So for that, this extra premium is charged. What those extra facilities are there? You know, in our policy, the room rent limit is 2% of the sum insured and minimum 5,000. Maximum. 2% of the sum insured and maximum 5,000. Room rent, boarding, nursing charges. This is the limit. But if the insurer is taking value pack, this will be revised. Here the 2% sum insured would be there, but the maximum limit could be 10,000 per day. So this is the enhanced benefit. Second benefit, ICU charges or ICU cardiac charges. In policy, 5% of the sum insured subject to maximum 10,000 per day. But if the value pack is taken, this limit will go up to 20,000 rupees per day. Third thing, policy provides 5% co-payment. Means 5% amount has to be borne by the insured himself. 5% amount of the claim. But if value pack is taken, nothing will be borne by the insured. Co-payment is waived off. 100% claim amount will be paid by the insurance company. This is third benefit. Fourth and last. Policy provides pre-hospitalization expenses for 30 days, post-hospitalization expenses for 60 days. If the value pack is taken, this limit is increased. 30 days becomes 60 and 60 days becomes 90. So this is value pack, but this is optional. Because when you are taking the value pack, that means loading of 15% premium would be there. If you compare the premium versus benefits, the insured is much better, because the limits are doubled or the benefits given are most important, that are required at the time of treatment. So you can suggest while selling the policy to take it value pack. There you can charge 15% extra premium. Now, individual and family floater premium comparison. For individual policy, 100% premium for all members is charged. But in floater policy, insured 100%, who is of the highest age, and for remaining persons only 45% of the individual premium. So obviously the family floater policy is better. But how this will be charged? Let us understand with an example. This is an example. Simple example. Say sum insured is 10 lakh. The main member of the family, who is of 45 years is taking the policy. His premium for 10 lakh rupees sum insured is 9676. So if he is taking individual policy, he has to pay 9676. If he is taking family floater, there again his premium would remain the same. That is the highest age, 100%. But if he is taking family floater and he is covering his wife, his son, his daughter also, in that case what would happen? Say suppose wife is 40 years of age. So her premium would be 9224 for individual policy. But in this family floater policy, she has to pay only 45% of 9224. That will become 4151. For son of 24 years, if he is individually taking, then would be 7415. But in family floater, his premium would remain only 3337 as 45% of individual premium. Similarly for daughter, 18 years, individual premium 6874, 45% premium 3093. That means for a family floater policy, Against the premium of 33,189, the family had to pay only 20,257. And if the value pack is taken, 15% extra will be loaded. So the total premium for a family floater with value pack would be 23,296 only, plus GST. So this is a simple method of calculating the premium for a sum insured of 10 lakh rupees. Normally, people prefer individual policies, but if they want family floater, you can say. Family floater is always advisable to the small families. Even there, it is the choice of the insured to get the parents covered, children covered, and even parents and in-laws covered. Similarly, another example for a 5 lakh rupees sum insured. Same, first person, 100% premium. 49 years is 10,524 is the premium, that will remain the same. But for all second, third, and fourth persons, 45% of their individual premium will be charged. Value pack will be 15% extra. So against 33,032 premium for a sum insured of 5 lakh rupees and a family floater, 21,520 to be paid only, that's all. Very good thing. Now premium discounts are also available. You can give direct discount 20%. A policy bought by direct channel. Second, family discount 10%. If 2 and more family members are covered under individual policy, not applicable on floater. Family discount if 2 different persons of a single family are taking the individual policy, then 10%. Online discount is also there, 5% if policy purchased online. Then Shriram Group employee discount, not only for SBI. Shriram Life Insurance, STFC or any other group, 5% premium discount. Then claim free renewal discount. This is important because for claim free renewal, company is providing 5% cumulative bonus. But if claim free renewal discount is required, that is 2% for first 5 claim free years. This discount is offered against a choice of increase in sum insured of 5% per annum. Against a choice of increase, whether the increase in sum insured is required or 2% discount is required. So this is a choice of the insured because the maximum renewal discount is 15% in case of claim. But the renewal discount reverts back to 0%. So this is a choice of the insured because it is not applicable if the CV is obtained. Now see, this is our TPA, Medi Assist. This is a big firm, Medi Assist Insurance TPA, countrywide network they are having. 13,000 plus hospital tie-ups are there. E-card from app they are providing, claim intimation from app they are providing, claim tracking app is there, WhatsApp is also they are connecting. So this is MA1 borderless benefit, Medi Assist healthcare services. They are also widely known in the country because 14,000 provider partnerships, 6 million plus claims received annually, 226 million plus total lives serviced so far, 81 offices pan India they are having, 32 insurance partners are there. Insurance partners means they are having a tie-up with the general and standalone health insurance companies of India. So 32 insurance companies are already having the tie-up with them. This is to connect with them real time on WhatsApp. And they are providing the download e-card facility, intimation facility, plan hospital, and all things are available on their websites. So their site can be visited for downloading the cards and understanding them. This is our first indemnity based health insurance product. Now, if you have any questions, you can ask. This is one good product. Company intends to aggressively sell it because the policy provides multi-purpose benefits. An indemnity-based product is always selected by the insurer. At the same time, one good thing is, if the insured want, he can take both kind of policies, benefit-based as well as indemnity-based. There is no contradiction of the rights. Under both the policies for the same disease, insured has got a right to claim from the insurance company. There is no clash of interest. Both policies will pay according to the provision of the policy. There is no infringement of the principle of indemnity. Because this is indemnity based policy, this will pay on the basis of indemnity, principle of indemnity. But the other one is not indemnity based policy. There the claim is paid on the benefit based limits. So there is no clash of interest. Any other doubts? Yes, come on. Yes.